The Luna Foundation Guard continuing to accumulate Bitcoin reserves, now worth about $1.7 billion, with a goal of buying up to $10 billion. But what is the LFG reserve's purpose, and when would it use the Bitcoin? Joining us now to discuss is CoinDesk editorial intern Krisztian Sandor. Welcome, Chris. Thanks for joining us. Good to see you.
Hi, Christine.
All right, not an intern, a reporter. My apologies. All right, so the Terra USD is an algorithmic stablecoin that maintains its $1 peg to the USD by burning or minting Luna. So the market cap of USD has ballooned tenfold over the past year to about $17 billion. So tell us who the Luna Foundation Guard is and why they need to build reserves for something that is supposed to rely on algorithms.
That's correct, Christine. This is the $18 billion question right now, because apparently from now appeared the most followed whale of the Bitcoin community and just bought up Bitcoin in bulk. Currently, Luna Foundation Guard holds almost as many Bitcoins as Tesla, so it's really keeping everyone on its toes. So Luna Foundation Guard is a non-profit organization based in Singapore. Its director is Do Kwon, and it's basically an advocate organization that gives grants and supports the development of the Terra blockchain and its stablecoin UST.
Okay, and so they're accumulating these reserves. They have UST, which is an algorithmic stablecoin, which means it's not backed or collateralized by Bitcoin or any other asset. So why are they accumulating Bitcoin, and how will it be used?
Well, so lately we have seen a couple implosion of algorithmic stablecoins. So these stablecoins are not, as just you said, algorithmic stablecoins are not backed by nothing but an algorithm. And these algorithmic stablecoins rely on traders to arbitrage any price deviation from the peg. So there were a lot of implosions lately of algorithmic stablecoins. So the goal of this foundation is to provide an additional support, so to say, like an additional leg to keep the peg stable. Because, well, the biggest concern and the biggest criticism regarding algorithmic stablecoins that they work until they just don't work. When everything keeps fine and the markets are, so to say, calm, the algorithm works. But when there's a run on one of an algorithmic stablecoin, things can go wrong really quickly.
Right. And I guess the concern is that there is a run. Well, they have now these reserves to backstop a problem when there's a run on the stablecoin. But, you know, might that trigger systemic failures in the crypto market, considering the huge growth that the Terra Luna system has seen over just the past year?
That's a great question. That's the thing. Nobody knows that because USD is the biggest algorithmic stablecoin. We have never seen such a big market capitalization for an algorithmic stablecoin. So there are concerns that if something happens with UST, all those turbulence can transmit to Bitcoin. But just to compare the market capitalization and the daily volumes of Bitcoin trading, it's hard to say that it really moves the market if there's a run on Terra. But there can be, repercussions on the crypto market. But that's the thing. I've talked to a bunch of analysts, and they still trying to figure it out how it exactly would look like. We have never seen anything like this before.